Hello everyone, welcome to our discussion sessions on official mock exam issued by ACCA for Advanced Audit and Assurance Level exam for March 2026 exam attempt. In our today's class, we will be discussing this question number 1 of this official mock exam. We will be discussing this question number 1 in complete detail, in which we will discuss the introduction, we will be reading the entire exhibits, and then we will actually draft the complete answer in our today's class. So it will be a very detailed session. Your patience and concentration will be really important. In these final days of your exam preparation, it is very important that you practice complete exam papers before going for your actual examination. In my past paper discussion series, I have discussed more than 10 complete attempt exam papers for you guys. And from today, we are starting discussion on this official mock exam, which is issued by ACCA for March 26 exam attempt. Okay, so let's go in detail of this exam paper. Now for this exam paper, I've already discussed this one earlier also, because same mock exam was issued by ACCA for March 25 attempt. So now what I will be doing is that I will be connecting my class with that session. It's the same question, Sheringham Associates. Don't get confused, because now when I will be connecting the class, then instead of March 26, it will be written as March 25. But it's the same mock exam and it's the same question which ACCA provided in March 25 mock exam, which I have already discussed. So I will be connecting the class. It's a very detailed discussion session. You need to listen to me carefully during this mock exam discussion. And then if you are my enrolled batch student, you have 3 mock exams which are provided by me, which you can attempt on your own and send me for marking and feedback. Okay, so now I will be connecting my class and we'll be discussing this same question of Sheringham Associate, which was provided in mock of 2025 exam attempt. Okay, so listen to this session, and if you have any query, you can always connect with me directly on my WhatsApp number. Very detailed discussion session. So let's start with the reading of the question. Let's read it. It is 1st July 20x5. You are a manager in the audit department of Sheringham Associates, a firm of chartered certified accountants, and you are responsible for the audit of Thornham Textile Company, a listed entity and a new client to your firm. Since it's a new client, it's first year of audit, so while determining the materiality benchmark, we will consider this client as a high risk client, because this will be first year of audit for our firm at this client. The company is the manufacturer of globally famous range of textile with sales around the world. The company has a financial year ending 30th September 20x5, and you are about to start planning this year's audit. See, we are reading the introduction. This is the first time reading of the question. While doing this, you have to read it with patience and concentration. Don't rush, don't jump to any conclusion. Same approach you have to follow in the exam. Just read the question first and try and identify maximum possible data. Once you have done the reading, then you pick up each of the requirement and then you go in detail of the evaluation. Same we'll be doing during our class. We will be attempting this question like we are in the actual examination. We will be following the same approach. Okay, now the following exhibits available on the left hand side of the screen provide information relevant to the question. Exhibit 1 is partner's email, which we'll be reading, an email which you have received from Wendy Runton, the audit engagement partner. Exhibit 2 is background information and matters relevant to audit planning. Exhibit 3 is selected financial information prepared by Sheringham Associate as part of its preliminary analytical procedures. And Exhibit 4 is notes of a meeting recently held with the audit committee of Thornham Textile Company, focusing on understanding of the future strategy of the business. So it's just an introduction that what this question is about. As we will read each of the exhibit in detail, you will get more idea about it. The information should be used to answer the question requirement within the response option provided. So the response option normally at advanced audit and assurance level is the word processor document in which you have to draft your complete answer. How you have to use this document, we will see it in detail when we will be actually drafting the answer. Okay, let's look at exhibit number one, which is the partner's email. I want you all to listen to me very carefully. Now, to audit manager from Wendy Runton, audit engagement partner. Subject Thornham Textile Company audit planning. Date 1st July 20X5. Now, this data will be used to make the format of the briefing notes. How you have to make them? We'll look at it when we'll be actually drafting the answer. Hello. I attended a planning meeting last week with the finance director and a representative of the audit committee of Thornham Textile Company, at which we discussed business developments during the year and plans for the future. The audit committee is keen for us to make as much use as possible of the internal audit team. I have provided you with my notes from the meeting as well as some background information about the company from our client due diligence procedures, as this is the first time we are performing this audit. I have decided to use profit before tax as the basis for determining materiality in line with Sheringham Associates' internal quality procedures. You all know that there are three benchmarks for the materiality: revenue, profit before tax, and assets. Here, the examiner has made it clear that in this question you have to use the benchmark of profit before tax. Now, on the basis of profit before tax, the range of materiality level is 5% to 10% of profit before tax. You have to perform your risk assessment in order to determine the materiality level from this range. As this is first year of audit, so it will be considered as a high risk client and you will be using the lower benchmark for determination of materiality. We'll look at all of these things in detail when we'll be exploring this answer and while we'll be attempting the requirement. I require you to prepare briefing notes for my use in which you, Part A, evaluate and prioritize the significant audit risk to be considered in planning the audit for financial year ending 30th September 20X5. So it's a simple question based on audit risk. Using profit before tax as your benchmark, you will need to determine and apply an appropriate materiality threshold in your briefing notes. 22 marks requirement. So this is the biggest one. Note you should refer to all exhibit when carrying out the requested risk evaluation. Part B, design the principal audit procedures to be performed in respect of the non-current assets relating to the planned closure of the whole factory and the share-based payment scheme. So it is one of the routine question number one. Part A, risk evaluation. Part B, relating to procedures. So it's just routine. You already have practiced multiple complete exam papers and you know that how you have to deal with such questions. Then using the details in relation to internal audit team work on internal controls. Contained in the meeting notes, Exhibit 4, I require you to discuss the factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department of Thornham Textile Company, 8 marks. Like how much we can rely on the work of internal auditors. So while placing reliance on the work of internal auditors, we look at their expertise, at the quality of the work they are doing, the independence which they are making sure, which they are implementing, like whether they are reporting it to the independent directors or whether they are reporting to some executive directors, because this will impact their independence. So an 8 marks requirement in relation to reliance on the work of internal auditors. Okay? And this is the partner's email. Thank you. So these are the three requirements which you have to attempt. 22 plus 10, 32 plus 8, 40 technical marks. If you look at the requirement tab, you have to respond to the instructions in the email from the audit engagement partner. The split of mark allocation is shown in Exhibit 1, which was 40 marks. So what about the remaining 10 marks? So those are the professional skill marks. And you all know that at Advanced Audit and Assurance Level Exam, there are 20 professional skill marks. From those 20 marks, 10 marks are in question number 1, 5 marks in question 2, and 5 marks in question 3. Professional marks will be awarded for demonstration of skill in communication, which includes format of the briefing notes, proper headings, use of proper wordings while answering your answer, how much clearly you communicate your things, analysis, analyzing the accounting and auditing rules, evaluation, relating it to the scenario, professional skepticism, questioning the data, challenging the data wherever it is complete, challenging the management's treatment, professional skepticism, like here management has done something wrong, skepticism, judgment, giving a decision that okay, here it's right, here it's wrong, prioritization of risk, it's judgment, picking up a materiality threshold, that's judgment, and commercial acumen, a practical, a realistic approach rather than being too much theoretical. So communication, clear communication in your answer, analysis of the rules, evaluating means relating it to the scenario, skepticism means questioning the things, questioning incomplete data, questioning management treatment, judgment, giving the decision, prioritizing the risk, that's your judgment, materiality threshold, that is the judgment, giving a judgment that okay, here management has done right and here it's wrong, judgment, commercial acumen, practical approach, realistic answer rather than being too much theoretical, realizing that in practical words there are certain limitations, commercial acumen, practical advice. Okay, so while we'll be solving this question, we have to demonstrate these skills. So these 10 marks are not a separate requirement. You have to demonstrate these skills while you are attempting these 40 marks requirements. So every point you will write, you will be evaluated from technical perspective and you will be evaluated from professional skill perspective. Okay, so if we start developing the basic format of the answer, okay, the question is what's the name of the firm? If you go and look at it, the name of the firm is Sheringham Associates. You can name the firm, the question name on the basis of firm name or on the basis of client name. Sheringham Associates. Okay, and we have to prepare the briefing notes. I require you to prepare briefing notes. So give the heading of briefing notes. Okay, just look at it how I'm doing these things. Now, how to make these briefing notes? Just go and pick up this data given in the partner's email. Just copy it, Control C, and paste it here, Control V. Break the lines, to, from, subject, and date. Now, since you are replying back, so you have to switch the to and from tab. Cut the from thing, post it into to, and cut this audit manager from to and paste it in from. And here add RE for reply. See, try and understand how you have to develop these briefing notes. This will give you marks in communication skill. A heading of briefing notes, to, from, subject, and date. How did we pick this? We went to the partner's email. We picked up the data from there. We switched the to and from tab. From will now become to because now we are replying. and to will come in from. You switch both of the tabs. In subject, you add RE for reply. Now, you will give an heading of introduction. Now, how to give this introduction, how you have to write it. Very simple, a very standard format to write an introduction. These briefing notes are in relation to audit planning for Thornham Textile Company for the year ended. What is the year end? See, these are the standard sentences. Just put the client name here, put the year end. What is the year end for which we are doing work? It's 30th September 20x5. For the year ended 30th September 20x5. A standard sentence. These briefing notes are in relation to audit planning for. Put the client name, Thornham Textiles Company. For the year ended, put the year end by looking at the question. Now you have to refer each of the requirement briefly. There are 3 requirements: audit risk, principal audit procedures, and factors to consider while placing reliance on the work of internal auditor. So let's refer each of the requirement briefly. These briefing notes include evaluation of significant audit risks to be considered in audit planning of Thornham Textiles Company. This is the first requirement. Evaluation of significant audit risk. Here it is. Evaluation of significant audit risk. Number 2, principal audit procedures. Further, it also includes principal audit procedures to be performed in relation to. What are the requirements? In relation to the non-current assets relating to planned closure of whole factory and the share-based payment scheme. Just copy it from here, Control C, and paste it here. In relation to the non-current assets relating to planned closure of whole factory and the share-based payment scheme. Done. What is the last requirement? Lastly, these briefing notes include evaluation of what? Look at part C. Evaluation of the factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department of Thornham Textile Company. Just paste it here. Evaluation of the factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department of Thornham Textile Company. The introduction is done. See, this is how you have to draft it. When you are going for an examination like advanced audit and assurance, you need to know these drafting techniques. Like you are writing a long introduction, spending a lot of time, you are just wasting your time. This entire briefing notes heading till this introduction, it holds 1 mark. So you need to save your time. To, from, subject date, just pick it from the partner's email. Draft a very standard introduction. Refer the client name, refer the date, and each of the requirement briefly. Pick it up from the partner's email where the requirements are stated. Evaluation of significant audit risk, principal audit procedures, and factors to be considered while placing reliance on the work of internal auditor. And now comes part A, which is audit risks. Okay? Now within audit risk, the first thing which you have to determine is materiality level. Whenever you are drafting risk of material misstatement or audit risk, you always have to draft a paragraph on materiality level.
So the format of the briefing notes, very much simple. And then comes the paragraph of materiality level. Okay. Now for materiality level, he has stated that we have to use the benchmark of profit before tax. Okay. Materiality level for Thornham Textiles Company audit will be based on benchmark of profit before tax. It will be between range of 5% to 10% of its profit before tax. See, these are the standard things which you have to follow. Like you have studied this many times, and this saves your time. You saw requirement of audit risk, you can simply start it. That for profit before tax, the threshold is 5% to 10% of the profit before tax. Now, we haven't read the complete question yet, like the background information, selected financial data, notes to the meeting, notes of a meeting. We haven't read them. We have just read the partner's email. So we have just drafted what we can do till now, like the format of the briefing notes, introduction, and in audit risk, the materiality level paragraph. Okay, you have referred the range that it's 5% to 10% of profit before tax. Your profit before tax is 8,800. Okay, it's in thousands, so it's 8.8 million. Okay, so you have simply referred that it will be 5% to 10% of profit before tax. Now you will calculate the range and then you will comment that the auditor will use his professional judgment to determine the materiality level from this threshold range. So if your profit before tax is 8,800, so 5% to 10% of the profit before tax that you need to refer. Okay, and then you will refer the paragraph that we will use the professional judgment since it's the first year of audit, so the risk will be higher. So you will comment on all of that. Okay, but now we are holding the drafting here and we'll move forward towards our reading. We'll read the question and then we'll continue our drafting. When we'll read the entire question, then we'll continue drafting of this materiality level paragraph. Okay, so that we go in the sequence you will be doing in the exam. Obviously, in the exam, you don't know that where is profit before tax. Okay, I knew that it's in selected financial information. I opened it and showed you. But in the exam, you won't know this. So in the exam, let's go about what you will be doing in the actual exam. Now let's resume our reading and then we'll come back towards the drafting again. Background information. Thornham Textile Company was formed 120 years ago and was originally based in a small textile mill. A textile mill is a manufacturing facility where textile or types of cloth are produced or processed into finished goods such as clothing. So he's telling us about the background. The company's clothing products are marketed under the popular Norfolk cloth brand name. The company became listed 20 years ago and complies fully with best practice corporate governance regulations. The Internal Audit Department provides assurance to the management on the effectiveness of the design and operations of the internal control and report to the audit committee. So, this is the background information. Currently, there is no audit risk. Let's move forward. The company has recently experienced a growth in revenue, but the labor intensive production methods and lack of economies of scale have resulted in low profit margins. In order to address this, the company has decided to take the following measures: relocation of production and closure of the whole factory. In order to reduce the cost of production and allow the company easier access to the cheaper end of clothing market, the company has decided to close the second largest of their three mills, known as Hall Factory, and relocate the production to a foreign country where the labor are cheaper. So they are closing their one of the factory. From the accounting perspective, when you are closing a factory, it's IFRS 5, held for sale and discontinued operation. See, in audit risk, there are accounting issues and then there are detection issues. like its first year of audit. So that is also an audit risk. That's a detection risk. And at the same time, there will be accounting risk also. Like they are closing the factory, so it will be IFRS 5, held for sale and discontinued operation. The company can relocate a very small number of staff from the Hall factory to the central factory, which will become the company's main production facility. However, 150 staff from the local workforce will be made redundant at a total cost of $1.2 million. Now, as soon as I read this word redundant, my mind started working towards IS 37 redundancy cost provision. See, you are not required to remember the standard numbers, but you need to remember the concept. You are an auditor. You are talking about financial statement. Accounting should be on your fingertips. An auditor without accounting knowledge is good for nothing. You're an auditor, you're reading the question, you are looking at the scenario, you saw, okay, you are closing the factory. Your mind started working towards IFRS 5. You said, okay, you are making the staff redundant. IS 37 provisioning redundancy cost. The company expects to complete the closure of the Hall factory by November 20x5. Now your year end is September. This will be done by 30th November, which means within next 12 months. So yes, IFRS 5 held for sale will apply. It is unlikely that the machinery used in the mill will be transferred, and it is expected that this will be sold along with the property. The carrying amount of the whole factory, including the machinery, is $4.7 million. An external surveyor is currently carrying out a valuation of the whole factory. The management of Thornham Textile Company has been in discussion with another company who may be prepared to buy the whole factory as an ongoing business. If this were to go ahead, management believe that they would be able to sell the whole factory for $4 million. Wait a minute. The carrying value is 4.7. It will be sold for $4 million. Impairment, impairment. And since you are selling the factory, the value in use is now ignorable. You are not using it, you are closing it. Okay? So fair value less cost to sell, you have to impair it to $4 million. And the buyer would retain half of the existing workforce. However, Thornham Textile Company would still need to make the remainder of the staff redundant prior to any of the sale. So either whole of the staff will be made redundant, in which 1.2 million is the provision. Or if half of them will be made redundant, then in case 600,000 will be the redundancy cost. Okay, so if I start making the list, I will write a paragraph of materiality level, then I'm making the risk. The first audit risk will be first year of audit. Okay, that's an audit risk. Another risk is held for sale for this hall factory. Okay, then provision for redundancy, provision for redundancy cost. Okay, so I'm just making the list of the risk which I'll be drafting. The audit risk. Okay, it's first year of audit, you remember. It was written here as this is the first time we are performing this audit. So first year of audit is a detection risk, held for sale for whole factory, and provision for redundancy cost. Okay, now let's move forward. Opening of a new branch in Farland. The company has set up a new operation in Farland, a country developing a reputation for quality textile, but with a significant lower labor cost in the country Thornham Textile currently operates. Farland's unit of currency is Pobble. To date, the company purchased a combined factory and a warehouse at a cost of 14 million pobbles, when the exchange rate was 2.2 pobbles to $1. The average exchange rate for 20x5 has been 2.35 pobbles per dollar. One of the senior manager with Thornham Textile has been relocated to Farland and is working with the local team to recruit and train staff for the new mill. So here again, there is an accounting risk in relation to the translation. Like this factory cost of 14 million pobles, it will be translated according to the initial exchange rate of 2.22. Okay. Now the operations there, they will be translated throughout the year using the average exchange rate. So the translation, this will be a big issue for this business. And since it's first time overseas branch, so the translation and recording the exchange rate issues, there is a high risk that they may do misstatements. Management expects that Farland Mill will start production in the next few weeks, and the projected revenue for the year ending 30th September 20x5 includes forecast sales from the Farland Mill from August 20x5 onwards. This has been established as a branch of Thornham Textile and is not a separate subsidiary. Okay, so it's not a situation of consolidation, it's just your overseas branch. Okay, so translation risk for Farland operations. Okay, translation risk, it's an accounting issue that maybe the translation is not done correctly. The initial recognition at the initial exchange rate, and then the ongoing operations like the sales, the cost incurred there, you have to use the average exchange rate. So, 2 marks for materiality level, 2 marks for first year of audit when we will draft it. Okay, and for each of the accounting risk, 3 marks each. 3 plus 3 plus 3. So 9 plus 2, 11 plus 2, 13. We have points to gain up to 13 technical marks. And this complete question is of how many marks this audit risk? It's 22 marks. So let's read further. We are just making down the risk, the list for the risk which we will be drafting, and then we'll explore it in detail when we'll be actually drafting the answer. Forecast revenue for 30th September 20x5 is 79,500, which has increased from 57,400 level of the previous year. A big increase in revenue. Profit before tax has also increased. Year-end share price is not available. So here you can make a financial analysis. See, the prioritization of the risk will be done later. Currently, we will just develop the risk. Currently, we are just making a list of the risk. When we'll draft all the risk later on, at last we'll do the prioritization. So using the revenue, you'll calculate the growth in revenue, you will calculate growth in profit before tax. 0.5 mark for each of the calculation. Very limited, selected financial data is provided. Very limited. So 0.5 mark for each of the calculations. So 1 mark here, and 2 marks are given for the commentary. So till now, financial analysis part will be of 3 marks. 1 mark for the calculation because you can just calculate 2 ratios, growth in revenue and growth in profit. And 2 marks for the commentary. Okay. Now, note 1. This information has been prepared as at 1st July 20x5 and the year-end share price is currently unknown. It is not deemed appropriate to project the share price as at 30th September 20x5. Share-based payment scheme. In order to motivate employees and directors, Thornham Textile Company has introduced a share-based payment scheme for all their existing staff, IFRS 2 share-based payment. The share scheme provides the option to buy for the staff to buy 1,000 shares at price of $2.5, providing they remain with the company until the vesting date of 30th September 20x7. So these are equity settled options because they have to buy shares. It's not cash settled. You have to value these share options according to the fair value of the option at grant date. And then you will look at the vesting conditions. The options were granted on 1st October 20x4 and had a value of $1.7 on that date. So fair value of the option on grant date is used. The company does not expect to lose any staff over the vesting period, except for the staff expected to be made redundant as the closure of the Hall factory. Thornham Textile employs around 1,000 people as of 1st July 20x5. So issue in relation to share-based payment, due to the redundancy of the staff, the recognition of the expense may get changed. Okay, so you have to refer the rules of share-based payment, IFRS 2, you have to refer that. Now comes the litigation thing. The company is involved in legal proceeding against three retailers who use the term Norfolk cloth to describe their clothing range. Patents protect the Norfolk cloth name, and only products at the Thornham Textile Company mill are permitted to use Norfolk cloth name. Thornham Textile is suing the three companies. So we are not sued, we are suing someone. So it's a situation of contingent asset. We are suing them for the damages of $2 million. This is not currently recognized in the financial statement for the year ended 30th September 20X5. So as per IS 37, contingent asset, if it's remote, do nothing. If it's possible, do nothing. If it's probable, give a disclosure. If it's virtually certain, then you can record a receivable. Now, we don't exactly know the chances of recovery, but we'll discuss the implications of IS 37 here. Okay, so litigation. So, this is also an accounting issue. Flood damage. Thornham Textile Company suffered devastating damage in 20X5 when a local river caused flooding following recent heavy rainstorm. The company's main warehouse containing the inventory of cloth for winter clothing ranges planned for sale from August 20X5 was flooded, and cleanup operations have yet to begin. Management has estimated that value of inventory affected is $625,000. No allowance for the inventory or further cost in relation to the damaged warehouse has been recognized in the forecast figure. So that is wrong. What are you waiting for? You need to write down the inventory. Okay? So flood damage. The inventory write down needs to be done. I particularly believe that this question is a real piece of cake. Very easy accounting issues involved in it. And then comes Exhibit 4, notes of the meeting. Let's read it. During the year, the internal audit team performed work on the company's internal controls and produced a comprehensive report for the attention of audit committee. The report includes documentation of systems, results of the control evaluation, and highlights examples of best practices in areas where controls were found to be particularly robust. The audit committee has suggested that Sheringham Associates places reliance on this report in order to reduce the amount and detail of substantive audit procedures to be performed. The audit committee also suggests that the internal audit team could be used to perform some testing controls for the purpose of external audit. So that is related to part C, where we'll be discussing about the reliance to be placed on the work of internal audit team. Okay, so that's a separate requirement. And the requirement tab, which we have already read. So now let's come back to the scenario. Graph the audit risk in detail. Okay, I want you all to listen to me very carefully. Okay, we have listed down all of the audit risk. We'll do the drafting. Materiality level 2 marks. First year of audit 2 marks. See, material, I'm writing the marking guidelines so that you can have an idea. First year of audit 2 marks point because it's a detection risk. We'll delete these marking guidelines at that. Held for sale for whole factory, it's an accounting issue, 3 marks. Provision for redundancy cost, accounting issue. Translation risk, accounting issue. Financial analysis, there were only two ratios, change in revenue and change in profit before tax. Share based payment, 3 marks. Litigation, 3 marks. All are the accounting issues. Flood damage, 3 marks. And then at last, you will write a conclusion, which is a professional skill matter. So, 2 plus 2, 4 plus 3, 7 plus 3, 10 plus 3, 13, 16, 19, 22, and 25. How many marks you have to attempt? You have to attempt 22 marks. So at the end, you can skip one of the risk, any of them, and you will get the complete 22 marks. Okay? From the risk written, you have to do the prioritization. We'll look at each of the thing in detail. Technical marks for materiality level paragraph are 2 marks. Okay? First year of audit, 2 marks. It's a detection issue. For accounting issues, you get 3 marks each. Okay? So coming back to the drafting. Materiality level for Thornham Textile Company audit will be based on benchmark of profit before tax. It was instructed to us by the partner email. It will be between range of 5% to 10% of profit before tax. What is the profit before tax? It's 8,800 and then 3 zeros. So it's 8.8 million. So 10% of 8.8 million will be 880,000. 10% of 8.8 million will be 880,000 and 5% will be 440,000. Simple maths you can do on the calculator also. So will be between of its profit before tax, it will be between range of 5% to 10% of its profit before tax, which will be between $440,000 to $880,000. You calculate these amounts. So these calculation, like you applied 5% on your profit before tax, and then you apply 10%. For every calculation you do, you will get additional zero point 0.5 mark each. That is in addition to these 2 marks. Okay? I ignore these marks normally during my drafting so that if some of the point of a student is weak in the examination, these calculation marks will be your lifesaver. They will cover your marks. Okay? Our firm will have to use professional judgment in order to determine materiality level from this threshold. This judgment will be based on risk assessment of Thornham Textiles Company audit. Okay, standard sentences. These are standard sentences. Okay, refer the benchmark, refer the ranges, calculated, put standard sentences that we will be using the professional judgment. Now, while taking this judgment, look at 3 things. Whether it's first year of audit or not, whether it's a listed entity or not, whether there are any major transactions during the year or not. These 3 things will help you to take a judgment. As it is first year of audit for our firm at Thornham Textiles Company, therefore it will be considered as high risk audit from this perspective. First thing, whether it's first year of audit or an existing audit. Further, Thornham Textile Company is a listed entity, and this also increases risk of audit as it will be subject to greater regulatory requirements. Lastly, considering major transactions during the year, including closure of halt factory and start of new operations in far land, risk of audit is higher. You have to look at 3 things. Whether it's first year of audit or not, whether it's a listed entity or not, and what are the major transactions during the year. Considering higher risk of audit, our firm will use lower threshold for materiality during Thornham Textiles Company audit. Materiality threshold will be $440,000. See, this paragraph which you have written, it has 2 technical marks. One additional mark in technical head only for the calculation, 5% to 10% that calculation. 1 mark more in professional skill. 1 mark more in professional skill. And that is your skill of taking a judgment. You took a judgment that, okay, this is the materiality threshold for Thornham Textile Company audit. 2 marks for this paragraph, the entire wording, looking at the partner email instruction, referring the range, referring the sentences, evaluating 3 things: first year of audit, number 2, listed or not, number 3, major issues during the year. 2 marks for this paragraph, 1 additional mark for calculation. These 3 are in technical marks. 1 mark in professional skill for taking a judgment. See, this is the reason why I always say that advanced audit and assurance level is the examination of drafting skill. See, it's very easy for me to teach like other teachers who just open the answer and read it with you. It's just easy. It will save my time. I've spent 46 minutes and I've written only 1 paragraph till now. But that will give you an insight that how you have to deal with actual exam paper. The important thing is to make sure that you pass this exam, not to make some marketing points. This is important. I have to teach you that how you have to draft this. Okay. So this is how you draft this materiality level paragraph. I hope that you are understanding the drafting technique. Done. Now let's move forward and draft the first risk, which is in relation to first year of audit. Okay. A 2 marks point, a simple detection issue that this is the first year we are performing audit for Thornham Textile Company. There are 2 matters to consider here. In the first year of audit, we have issues in relation to opening balances because we didn't audit the previous year. We don't know the reliability of opening balances because those must have been audited by a different firm. And second is lack of understanding in the first year of audit, which may affect our ability to evaluate the issues during audit. Okay, our firm will be performing audit of Thornham Textile Company for the first time in year ended 30th September 20x5. As it is first year of audit, our firm may lack understanding about Thornham Textile Company's business and its systems. This will affect our firm's ability to deal with audit issues appropriately. Okay, a very simple thing. Whatever you have in your mind, just put it. There are 2 issues. First year of audit, you lack understanding. You don't know about the business industry. You don't know about the environment. Second thing, opening balances. Another issue which arises in first year of audit is in relation to opening balances. Our firm didn't perform audit of previous year for Thornham Textile Company, and therefore it will have to rely on previous audit firm in relation to opening balances. If any misstatement exists in opening balances, it will affect current year financial statements also. It's done. 2 marks. First year of audit, simple 2 evaluation. It's first year of audit. You have to rely on the previous audit firm work. That increases your risk. Number two, opening balances. You are relying on someone else's work for the opening balances. And number two, you lack understanding about the company's business, its systems, its operation, its environment. That will affect your ability to evaluate the audit issues. Be very crisp and clear. It's a simple detection issue. What is the issue and why is it important? You have to simply explain it. It's first year of audit. We will lack understanding. It will affect our ability to deal with issues. Opening balances. We didn't perform the previous year audit. We have to rely on someone else's work. That increases the risk that maybe they haven't done the work properly. It's that simple. I don't think it's a difficult one. Okay, let's move forward. Now let's pick up each of the accounting issue. You all know the drafting approach. When you are dealing with an accounting issue, write the correct treatment, comment on the management, what they have done, any wrong treatment, any risk, what heads are affected, and whether that issue is material or not. 4 things. Correct treatment when you are talking about accounting issues. These accounting issues are audit risk because you are doing audit of financial statement. Correct accounting treatment. Comment on the management or the risk. Heads affected and comment on the materiality. Let's draft the risk in relation to held for sale. An accounting issue, 3 marks point. Okay, let's look at it. Okay, so in relation to held for sale for whole factory, what should be the correct accounting treatment? Planned sale for whole factory need to be treated under rules of held for sale as its sale has been approved by the board of Thornham Textile Company and company is also actively looking for its buyer. Further, sale is expected to be done within 12 months of the year end. Okay, if you remember, we have just read the background information. It was clearly written that the decision has been taken to relocate the production and move it to the other country. This whole factory will be closed, which is one of the largest factory. Okay, and the company is actively looking with the buyer because they are in the discussion with another company also. Okay, and the sale is expected to take place, if you remember, by November 20x5. Okay, and the year end is 30th September. So the things are almost towards the closure. So it meets the criteria of held for sale. Now, as per held for sale, this asset need to be valued at lower of its carrying value, which is $4.7 million, and its fair value less cost to sell, which is $4 million, which is the expected selling price if the deal goes ahead with one of the company. So this means an impairment loss of $0.7 million need to be recorded. Okay, so first we need to explain the correct accounting treatment. Okay, as per held for sale treatment, Thornham Textile Company need to value whole factory at lower of its carrying value of $4.7 million and its fair value less cost to sell, which is expected to be $4 million. Okay, so we need to value it at lower of. Considering this, impairment expense of $0.7 million need to be recognized. Okay, so this is the correct accounting treatment, that it need to be treated under held for sale and it need to be valued at lower of the carrying value and the fair value less cost to sell. The carrying value is $4.7 million and fair value less cost to sell is $4 million. So impairment of $0.7 million need to be recognized. Now, apparently, management has not recorded this impairment. Okay, like there is no detail given about that whether they recorded the impairment expense or not. Okay, so let's comment on the management. Apparently, management has not recorded this impairment expense of $0.7 million. This will overstate its profits and Hall factory assets by $0.7 million. Okay, so you commented on the management that management has done something wrong. They have not recorded the impairment expense, and as a result, the profits and assets will be overstated. Okay, this misstatement of $0.7 million exceeds the materiality level determined for Thornham Textiles Company audit of $40,000. Therefore, it is material to financial statement. Okay, let me repeat it again. This is a 3 marks accounting issue. You first need to write down the correct accounting treatment. That planned sale for Hall factory will be treated under held for sale. If you remember, you can refer the accounting standard number also, that it will be IFRS 5. Writing accounting standard number is good. Okay, like a student should write if they remember. But if they don't remember, please don't write a wrong number, because it's not mandatory. It's good. If you write it, it's good. If you don't write, there's no issue. But please don't write a wrong number. I don't write it in my answers because I want to give an impression to the students that writing it is not necessary. But if you want, you can write it under rules of held for sale IFRS 5. Need to be treated under rules of held for sale as its sale has been approved by board of Thornham Textile Company and company is actively looking for its buyer. Further sale is expected to be done within 12 months of the year end. As per held for sale treatment, Thornham Textile Company need to value Hall factory at lower of its carrying value and its fair value loss cash to sell, which is 4 million. So impairment of 0.7 million need to be recognized. Apparently, management has not recognized the impairment, which will overstate its profits and assets. This misstatement exceeds the materiality level. $0.7 million means $700,000. So it exceeds the materiality level of $440,000. So it's material to FS. Okay. Now let's look at another issue, which is in relation to provision for redundancy cost. For provision of redundancy cost, we need to think about the implications of IS 37. The provision for redundancy cost need to be recognized if present obligation for it has been created. Now, how a present obligation is created? When you inform the affected parties, like the closure of the factory, its decision has been taken. You have started informing the affected parties that, okay, your jobs are going. Okay, so it will create an obligation. A reliable estimate exists. You know that it will be a provision of around $1.2 million. And the outflow is probable because the factory will close in the 2 months of the year end. Okay. So company can relocate a very small number of staff from Hall factory to the central factory, which will become the company's main production facility. However, 150 staff from the local workforce will be made redundant at a total cost of $1.2 million. The company expects to complete the closure of Hall factory by November 20x5. Now, if this factory is sold to another company, then in that case, half of the workforce will be retained because that company will continue their job, and in that case half will be made redundant. Okay, but so either it will be a provision of $1.2 million or it will be of $600,000, which is half of $1.6 million. But in any case, it's material to the financial statement. Okay, so Thornham Company need to recognize provision for redundancy cost in relation to expected employees, which will be made redundant. As decision to close the factory has been taken has been taken and staff which will be made redundant have been identified. Therefore, this provision need to be recognized. This provision need to be recognized as it is a legal obligation to pay the redundancy amount. Further, reliable estimate and probability of outflow also exist. Okay, provision of complete $1.2 million will be required if all 150 staff will be made redundant, or of $600,000 if half of the staff will be made redundant if deal with other organization is done which will retain half of the staff. Okay, so first you have to explain the correct accounting treatment, that what need to be done. Okay, so we need to record the provision either of 1.2 million or 600,000, but in any case the provision need to be recorded because the decision has been taken. The factory will be closed in next 2 months. Your year end is 30th September. By November the factory will be closed. Management has not recorded, apparently they haven't recorded, no detail is given, has not recorded this redundancy provision, which is a wrong accounting treatment. This misstatement will overstate profits by $1.2 million or by $600,000 depending on the required provision, and will understate the provision liability. Okay, now misstatement of $1.2 million or of $600,000 both will exceed determined materiality level of $40,000. Therefore, this misstatement is material to financial statements. So, currently we are at audit planning phase. We are reviewing the things at a very preliminary level. So, we identify these as the misstatements. We are writing them in audit risk because as we move forward in the audit, these misstatements will impact the financial statement. These are the audit risks. The auditor need to get them corrected. Otherwise, the opinion will get affected. Okay. So, we made the format of the briefing notes very simple. We wrote a paragraph on materiality. We wrote a risk on first year of audit, held for sale treatment, redundancy cost provision, that this provision need to be made because the decision has been taken. You have identified that, okay, 150 of the staff will be made redundant. So everything is clear. You need to record the provision as per IS 37. Now, it will either be of 1.2 million if all of the staff will be made redundant, or of $600,000 if half of the staff will be made redundant. Okay, half of the staff will be made redundant if the factory is taken over by other organization. Now, translation risk for far land operations. Now they are going for another new branch in Farling, which has a different currency. That currency is pobbles. So there is a risk that they select the correct exchange rate while dealing with the transactions. The initial investment will be recognized at the starting exchange rate at the time of investment of 2.22 pobbles to $1. And then the transactions during the year will be translated according to the average exchange rate. Okay, so translation risk of far land operation. So first, the correct accounting treatment, the risk, heads affected, and the materiality. Okay, now Thornham Company will have to translate its initial investment in farmland using exchange rate at the time of investment while recording this investment in its financial statement. Investment of how much? Of 14 million pobbles. Of 14 million pobbles will be recorded at exchange rate of 2.22, which will be how much if you use the calculator? 14 million pobbles divided by 2.22, so it's $6.3 million, will be $6.3 million. Further, revenue and expenses arising from branch in farmland will be translated using average exchange rate. So this is the correct accounting treatment, that what should be done. Now we don't exactly know that what they have done. We don't know that what exchange rate they have used. So now you will refer it as a risk. A risk exists. A risk exists that transactions of farmland are translated using wrong exchange rate. Okay, use of wrong exchange rate will result in misstatement of revenue and expenses of transactions happening in farmland. Okay, it will be a big issue. For the initial investment, there is one risk, and later on also it's an ongoing risk. Okay, now considering, okay, will misstate revenue, you have commented on the heads affected. Considering on the amount of investment of $6.3 million, investment of farmland is a material investment as it exceeds materiality level of $440,000. Okay, so it was again an accounting risk. You first refer the correct accounting treatment, that what should be done, recognition of initial investment, and then the risk in relation to ongoing revenue and expenses. Now we didn't exactly know that what they have done, so we referred it as a risk. A risk exists that transactions of farmland are translated using wrong exchange rate. And what will happen as a wrong exchange rate? So all the revenue and expenses will get disturbed. Okay. Then there is financial analysis. Then there is share-based payment risk, litigation, and flood damage. Okay. So for the financial analysis, it will be a brief analysis, growth in revenue and growth in profit before tax. So what's the growth in revenue? From 57,400, it has increased to 79,500. So it has increased by 22,100 divided by 57,400. New minus old divided by old multiplied by 100. So revenue has increased by 38.5%, which is obviously an abnormal growth. And 8,800 minus 6,500 divided by 6,500, profit before tax has increased by 35.3%. So obviously it's a very much abnormal growth, and abnormal growth is always a risk. Okay, so these calculation, they gain 0.5 mark each, and now you will make a comment on it. Now, if you remember in the background information, it was clearly written that the company has recently experienced a growth in revenue, but the labor-intensive production methods and lack of economies of scale have resulted in low profit margins. So considering the comments you are saying, and then when I look at the financial position, such big growth numbers, they don't justify. And obviously, a new factory of Farland, it will not start contributing a lot in this period because it was just started from the month of August 20x5. Okay. Growth in revenue of 38.5% is an abnormal growth. Which creates a risk of misstatement. Okay. Business of Thornham Company is currently suffering from lack of economies of scale and high labor intensive business. Okay, considering this situation, growth of 38.5% is an unjustified growth. Further, profit before tax has also shown an abnormal growth of 35.3%. Okay, now considering that Thornham Textile Company is a listed entity, directors may be under a pressure from shareholders to report better performance, and as a result they may have manipulated the financial statements. Okay, so this is what we call as the financial analysis. The calculation marks are separate and the commentary marks are separate ones. You calculated growth in revenue and growth in profit before tax. You were not provided with a lot of financial data. It was very much limited. So you only commented on that. Is it clear? Let's move forward. Next thing is share-based payment. Okay, let's look at that. What's the issue in relation to share-based payment? So they issued the share-based payment to the directors and the employees. Okay, the scheme provides the option to buy 1,000 shares each at a price of $2.5, provided they remain until the vesting date of 30th September 20x7. So they were granted on 1st October 20x4. So it was 3 years. X5, X6, and X7. Fair value of the option at grant date was $1.7. There are 1,000 employees. So you can estimate the expense which was being recognized every year. But since some of the staff will be removed due to redundancy, so the recording of the expense would now become non-linear. Originally, it was going on linear because they didn't expect any loss of staff. But now it will not be a linear, a constant recognition of expense. Okay. Share-based payment plan issued by Thornham Company need to be valued according to fair value of options at grant date. Its expense will be recorded over the vesting period of 3 years as options are issued on 1st October 20x4 and will be vested or matured on 30th September 20x7. See, first we are explaining the correct accounting treatment, that these options are issued on 1st October x4 and they will get matured, they will be vested on 30th September 20x7. Expense will be recorded according to expected number of employees who will be able to vest these share options. Okay, so now we have first explained the correct accounting treatment, that how this share-based option plan need to be treated. Expected expense which need to be recorded in year ended 30th September 20x5 considering expected redundancy of 150 employees. If you remember, it was written in the background information that it's expected that 150 of the staff will be made redundant. However, it may be reduced to half if the deal is done with another business, with another company which may purchase this whole factory. But currently, we are assuming that if 150 of the staff is made redundant. Considering expected redundancy of 150 employees will be, see currently how many staff they have 1000 employees. So if they will remove 150 of the employees, so expected expense will be 850 employees multiplied by 1000 options. If you can go and refer it, you have 1000 people, 150 will be made redundant, so it will be 850 employees, 1000 options each. Fair value of the option, not look at the exercise price, look at the fair value of the option, which is $1.7. $1.7 divided by 3 years vesting period. So 850 employees into 1000 options into $1.7 divided by 3 years. So it's $481,666. Let me repeat it again. I know that some of you might have some confusion in your mind. First of all, we wrote the correct treatment that share-based payment plan issued by Thornham Company need to be valued according to fair value of option at grant date. Its expense will be recorded over the vesting period of 3 years as options are issued on 1st October and will be matured on 30th September X7. Expense will be recorded according to expected number of employees, according to expected number of employees who will vest these share options. So expected expense is 850 employees. Currently those are 1000, but 150 will be made redundant. So expected employees are 850, 1000 options, $1.7 divided by 3 years vesting period. Okay. Now we don't exactly know that what management has done, so we'll refer it as a risk. A risk exists that management has recognized expense wrongly, as they may not have taken impact of expected redundancy. Okay, so there is a risk. This misstatement will affect expense amount recognized and equity reserve recorded for this equity settled payment. Okay, expected expense of $481,666 exceeds materiality level of $440,000. Therefore, it is material to financial statement. Okay, so it was very important that you remember the treatment of IFRS 2 share-based payment. First, you commented the correct treatment, that how the equity settled plan need to be recorded. It's valued at fair value of option at the grant date. We commented on that. We said that we look at the expected number of employees and expected options. We calculated the expense which need to be recognized. This calculation will gain additional 0.5 mark. Every calculation you do, you are getting additional 0.5 mark. We are not including it in our expected marks. Why? Because these are our safeguards. I would say these are our additional marks which we are keeping as a reserve. Okay, like if sometimes our comment is weak, you can cover these additional marks through the calculation. Okay. Now comes another point, which is in relation to litigation. The company has filed a litigation against the other companies who have used our brand, and that is of $2 million. And then there is an issue relating to flood damage. You can write any one of them because your marks will be completed. If you remember, 2 marks for materiality, plus 2 for first year of audit, plus 3, then plus 3. So 2, 4, 7, 10, 13, 16, 19. So there are 22 total. So you can either write litigation or flood damage, anyone, whichever you like. Okay, so you'll be writing the litigation one because it's coming in sequence, but if someone would write flood damage also, that's also acceptable. So the company is involved in a legal proceeding against 3 retailers who use the term Norfolk cloth to describe their clothing range. Patents protect the Norfolk cloth name, and only products made at Thornham Textile Company mills are permitted to use this Norfolk cloth name. Thornham Textile Company suing 3 companies for the damage of $2 million. So the case which we have filed, it's a contingent asset as per IS 37. Okay. And if the chances of winning this case are probable, we need to give a disclosure. And if it's virtually certain, we need to recognize the asset. So the company hasn't currently recognized it. So we don't know exactly about the chances of winning the case, but it may affect the notes to the accounts or the receivable asset if the chances were virtually certain. Okay, so let's draft a risk in relation to litigation. Okay, so litigation filed by Thornham Textiles Company is a contingent asset which need to be considered under rules of IS 37. If you remember the standard number, you can write. If you don't remember, that's also okay. Okay, under rules of IS 37. If chances of winning this case are probable, then a disclosure note need to be given in relation to it. And if the chances to win this case are virtually certain, then a receivable asset need to be recognized for it. Okay, so you first write the correct accounting treatment. Management of Thornham Textile Company has not recorded this litigation, which creates a risk that either a disclosure note that either notes to the accounts or receivable asset is misstated if the chances of winning the case are probable or virtually certain. If they are either remote or possible, then they have done the correct treatment. But if it's possible or virtually certain, then either disclosure note or receivable will be required. Okay, litigation filed of $2 million exceeds materiality level of $440,000. Therefore, it is material to financial statement. Okay, and obviously since our marks are completed, so we won't write the paragraph of flood damage, but that was a simple risk in relation to IS2 that they need to write down their inventory which has been damaged. And now a conclusion will be given which will justify the prioritization of the risk. So now we have written all of the risk. Now we need to prioritize them. Materiality level was a 2 marks risk in which we justify the materiality level. Then first year of audit, 2 marks risk. Held for sale was an impairment issue of $0.7 million. Provision for redundancy cost, translation risk of parallel operation, financial analysis, share-based payment, and litigation. Okay, so now let's talk about prioritization of the risk. We will cut paste some things, we'll prioritize, and then we'll write the conclusion paragraph. So while prioritization, let's look at each of the risks and see which are important one. See, first year of audit is always the most important risk because it increases the detection risk to a very high level. Then held for sale of whole factory, that requires an adjustment of $0.7 million. Provision for redundancy cost, it will be $1.2 million to $600,000. See, these two are the actual misstatements which exist in the financial statement. Then the translation risk of a big investment which they have done. But apparently the revenue issue is of only 1 month. If you can go and look at the background, the revenue is only of 1 month from August 20x5 onward. Okay, because the new factory has just started near the year end. Then there's financial analysis, share-based payment is issue of 481,000, and litigation is apparently an issue relating to disclosure. Okay, now normally the financial analysis we write it at the end. Okay, the financial analysis, it's good if you write it at the end. Okay, if we are cutting and pasting it, the table will get disturbed. So what we'll do is we'll move these two up. Okay, just a second. Okay, you can write it earlier also, but normally we put this financial analysis thing at the end, and the litigation thing also. Cut, Control X and paste. Now what we have to do is that we have to prioritize the top 3 risks, not all of the risk. So the first important risk is first year of audit, no doubt. Then held for sale, which is an issue of $0.7 million, and provision issue, which can be 1.2 million to 600,000. So apparently these two are the important one. Translation risk. See, obviously that investment is very big. It's of $6.3 million. But obviously they must have done somehow translation. They cannot record 14 million pobbles directly. So even if they would use a wrong exchange rate, that's between 2.2 to 2.35, it won't create a very big issue. Okay. But the two misstatements in relation to held for sale and provision for redundancy costs, these are the two big things happening in this year. Then share-based payment, obviously it's a small issue. And litigation, it's apparently a matter of disclosure because it's a contingent asset. Okay. So most significant audit risk for Thornham Textiles Company audit is a fact that it is first year of audit for our firm. This will impact our firm's ability to deal with audit issues during audit, to deal with audit issues at Thornham Company audit. Okay. Second most significant risk is in relation to sale of Hall factory, its recognition as held for sale and related disclosures. Because when you put something in held for sale, you need to give relevant disclosures also. And third most significant risk is in relation to redundancy provisions that need to be recognized due to closure of halt factory. Okay, you just need to prioritize the top 3 risks, okay, which you have prioritized: first year of audit, sale of all factory, and provision for redundancy cost. Okay, now if someone would have taken a different judgment and he would have included this translation risk of farmland operations as a significant one, it would also be acceptable. It's an area of judgment. The examiner will keep a space. But obviously, share-based payment is a small amount risk. Litigation is a disclosure matter. So if someone would include these insignificant, that would be wrong. Okay. And in the conclusion, you justify your prioritization, that what prioritization you have done. Okay. Prioritization is for the top 3 risk. Now I can remove these marks which I wrote for your guideline. Obviously, in the examination, you don't need to write them. Okay, I wrote them for your guidelines so that you can have an idea while we were drafting the point. It's very important that you look at the marking guideline while drafting your answer. So this was the 22 marks requirement which we have done. Let me give you a brief overview again and then we'll move forward. We made the format of the briefing notes. We started with the audit risk. We look at materiality level, first year of audit, a detection risk, held for sale and accounting issue, Provision for redundancy costs need to be recognized, an accounting issue. Translation risk in relation to foreign operation. Share-based payment, how the expense need to be spreaded. Contingent asset thing. Financial analysis, commentary on the ratios. And a conclusion to justify your prioritization. See, this conclusion is not required at the end of the question. It's only given for ROMM and audit risk to justify your prioritization. Okay, now let's move forward towards part B. Principal audit procedures in relation to non-current assets relating to planned closure of all factory and the share-based payment scheme, 10 marks. So you'll be writing 5 procedures in each of them. Okay, so now we are moving towards principal audit procedures. Right? Within that, the first thing which we are dealing is non-current assets in relation to the planned closure of held for sale. You'll write 5 procedures here, and then you will write 5 procedures in relation to the other head, which is this share-based payment. It's not necessary that you split it in 5-5. You can do 6-4 also or 7-3 also. The examiner has kept it open, but obviously you need to write some procedures in both of them. It's 10 marks requirement, so it will be 5 marks each. Okay, so let's think about the audit procedures. Let's go and read the relevant data, and then we'll draft the relevant procedures in relation to the planned closure of the whole factory for the non-current assets, and then for the share-based payment, we need to write the procedures. It will be 1 mark each. Okay, let's read it and draft the procedures. Okay, so let's read about the closure of whole factory so that we can draft the procedures. In order to reduce the cost of production and allow the company easier access to cheaper end of clothing market, the company has decided to close the second largest of their 3 mills known as Hall Factory and relocate production to a foreign country where labor costs are cheaper. The company can relocate a very small number of staff from the Hall Factory to the central factory, which will become the company's main production facility. However, 150 staff from the local workforce will be made redundant at a total cost of $1.2 million. The company expects complete closure of Hall Factory by November 20x5. We have to design procedures in relation to non-current assets. So let's move forward so that we can comment on the non-current asset thing. It is unlikely that the machinery used in the mill will be transferred, and it is expected that this will be sold along with the property. The carrying amount of the whole factory, including the machinery, is $4.7 million. So here comes the detail about the non-current asset, which includes the machinery. So its carrying amount is $4.7 million. So now how will you verify this carrying amount? You will take the list of non-current assets installed in the whole factory, and you will verify its carrying value by looking at the non-current asset register, that whether the total of the non-current assets included in the whole factory, including these machine and everything, is $4.7 million or not. An external surveyor is currently carrying out the valuation of the whole factory. Now, survey is currently ongoing at the year end, but maybe by the subsequent period, during the subsequent period, the period after the year end, the survey report will be received, and that will be very important to verify the fair value less cost to sell of this factory. Okay, so let's start drafting the procedures. Now, while you are drafting the procedures, what you have to do is you first write that what the procedure is, like obtain, review, inspect, what will it verify, and the entire process of the procedure, like what you will be doing in that. So obtain list of non-current assets installed in Hall Factory from management and verify their carrying value. Verify their carrying value from non-current asset register that whether their total equals to $4.7 million or not as claimed by management. Okay, so you will verify the carrying value by obtaining the list of non-current assets installed there and verifying their carrying value from the non-current asset register. See, every procedure is of 1 mark. You have 10 marks here for the procedures. So 5 marks will be in relation to non-current assets and 5 marks will be in relation to share-based payment. Okay. While drafting the procedure, make sure that you make it detailed. Explain the complete process of the procedure. Don't make it very brief. Okay. Now, review the recent report of surveyor if received in subsequent period in order to verify fair value less cost to sell of non-current assets installed in Hall factory, as it will be required for impairment review. Okay, so you need to review the recent report of the surveyor if it's received in the subsequent period. Okay, now the management team of Thornham Textile Company has been in discussion with another company who may be prepared to buy the Hall factory as an ongoing business. If this were to go ahead, management believe that they will be able to sell the Hall factory for $4 million. So now you need to look at the correspondence with that buyer. You need to look at the market data that, okay, as per the market data, whether the fair value of the Hall factory is $4 million as according to the deal going on with another buyer, because that will also be required for the fair value less cost to sell. You can look at the approval, that whether approval has been done to sell the assets of Hall factory, because this approval to sell is very important for the valuation, because if the approval has been done, it will be treated under IFRS 5 and then its valuation will be at lower of carrying value and fair value less cost to sell. Okay, now review correspondence with the potential buyer of Hall factory in order to gain detail about progress of negotiation and to verify expected selling price of $4 million as claimed by management. Okay, or what else you can do? Review market data in relation to assets installed at Hall factory in order to gain detail about expected fair value of assets if deal with potential buyer do not goes ahead. Okay, review board minutes to verify approval to close the Hall factory and sale of its assets, as it will affect the valuation of non-current assets installed in Hall factory, because if there is an approval, it will be treated under IFRS 5 held for sale, and that will impact its valuation. So in relation to the non-current assets relating to the plant closure, you will look at the list of non-current assets, you will look at the recent surveyor report, you will look at the correspondence with the potential buyer, you can review the market data. What else you can do? You can review the board minutes, or you can also take a written representation from the management to get a surety that the sale is expected to be executed in next 12 months. Basically, the criteria of held for sale, that's very important. Then you can look at the extracts of the financial statement, that whether the impairment is correctly recorded, the classification of held for sale assets is properly done. So you need to focus on the held for sale transaction in relation to the Hall factory. Now let's draft 5 procedures in relation to the share-based payment scheme, which is given here. In order to motivate employees and directors, Thornham Textile Company has introduced a share-based payment scheme for all their existing staff. The share scheme provides the option for the staff to buy 1,000 shares each at a price of $2.5 if they remain with the company until the vesting date of 30th September 20X7. So very routine procedure, review the share-based agreement, review the board approval for the share-based scheme to verify these terms. Okay, let's graph the starting procedures. Review share-based agreement signed by Thornham Textile Company with its employees in order to verify number of options offered and the exercise price under the share plan. Okay, so you need to review the share-based agreement, review board approval for share-based payment scheme in order to gain detail about approved clauses by the board in order to verify that actual clauses in agreement match with the board approval. Okay, so review the board approval of the share-based agreement. Then the options were granted on 1st October 20x4 and had a fair value of $1.7 at that date. So review the management calculation of fair value of the option at grant date of 1.7. Because the exercise price is 2.5, how they've estimated the fair value. So we need to review the management calculation, review management's calculation of fair value of options at grant date of $1.7 and obtain list of assumptions they used while estimating this fair value of options. Auditor need to review the assumptions for reasonableness. Okay, so review the management's calculation, and if the fair value of the option was estimated through an expert, because it normally involves the financial management techniques. So if the fair value of options was estimated through an expert, then obtain expert report. Obtain expert report for estimation of fair value of options at grant date if management used expert for fair value estimation. Auditor need to review assumptions used by expert while estimating this fair value. Okay, so if expert was engaged, obtain the expert report, review that report. The company does not expect to lose any staff over the vesting period. So review the HR data, that what is the trend of staff turnover. Like normally the staff leaves the company or not. Okay, except for staff expected to be made redundant. So review a legal opinion or review the proposed agreement of redundancy, like those whom we will be making redundant. They are not leaving. We are making them redundant. We are removing them. So we need to give them a compensation if we are ending their option agreement. Okay, so we need to review the redundancy contract also. Review HR records in order to gain detail about staff turnover in previous periods in order to verify management's assumption that they do not expect staff to leave Thornham Textile Company normally. Okay, so you can review that. You can review the redundancy contract or a legal agreement or a legal opinion that how the staff which will be made redundant will be compensated for their lost options. You can review the calculation done by the management for estimating this share-based payment expense, because if you remember, it was a detailed calculation we ourselves did also, like 850 employees multiplied by 1,000 options multiplied by $1.7 divided by 3 years. So review the management calculation. But since it was a 10 marks requirement, so we wrote 5 procedures each. Okay, so 5 procedures in relation to non-current assets of Hall Factory and the share-based payment. See, I believe that drafting the procedures isn't a difficult thing. if you understand that transaction in a proper manner, be relaxed. Don't try to do rote learning for the procedures. Be relaxed. Look at the scenario and then draft the procedure. It's always easy. Like we just picked up the procedures in relation to the whole factory. We think about the valuation. We looked at held for sale treatment and similarly about the share-based payment. Okay. Now let's move forward. Part C. Factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department of Thornham Textile Company. 8 marks. So let's look at this last requirement, part C. Okay, I want you all to listen to me carefully. Factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal auditors. So let's go and read this exhibit and then list down the points. It's an 8 marks requirement, a general requirement. So we'll be drafting 8 points. Let's look at it. During the year, the internal audit team performed work on the company's internal controls and produced a comprehensive report for the attention of the audit committee. The report includes documentation of systems, results of control evaluation, and highlights examples of best practice in areas where controls were found to be particularly robust. The audit committee has suggested that Sheringham Associates, our firm, places reliance on this report in order to reduce the amount and detail of substantive audit procedures to be performed. So they are asking us to use the work done by the internal auditor. The audit committee also suggests that internal audit team could be used to perform some testing of controls for the purpose of external audit. So along with relying on the work they have done, the audit committee is also requesting us that we should use internal auditors as a direct assistance to external audit work. Okay, so now what we have to do is we have to list down the factors to be considered when determining the nature and extent of reliance which can be placed on the work of internal audit department of Thornham Textile Company. See, first of all, as per auditing standards, it's open to external auditor that if they want, they can rely on the work of internal auditor. It is their judgment. But the important thing is that the final responsibility of external audit will remain of the external auditor only. The responsibility won't be shifted to internal auditor. Okay. But in some local laws, use of internal auditor is prohibited. So if the local laws prohibit, then obviously, despite that auditing standards are permitting, you cannot use it. Okay, so this is what you need to consider. That if the external auditor is using, if the local law is permitting, the auditing standard says that if the external auditor is using the work of internal auditor, he has to think about 3 primary things. He has to think about the independence of the internal auditor, that how independently they are working. He needs to think about their competence, their expertise. And thirdly, he needs to look at how much quality work they are doing, whether proper systems of internal audit department are being followed or not. Despite of these 3 considerations, it's still a decision of external auditor that whether he want to use the work of internal auditor or not. And it's recommended that if he's using the work of internal auditor, he shouldn't be using it in high areas of risk. He should be using it in low risk areas. As far as direct assistance of internal auditors is concerned in external audit work, the external auditor can use them for direct assistance, but that direct assistance should not be in areas of high risk. Okay, so let's draft the answer. There's a complete technical article available also on reliance on the work of internal auditors. We have studied it. Okay, in my classes, in my lectures, I have covered each and every technical article. So if you are my student, you have already studied this complete article on using the work of internal auditor. Otherwise, you must go and refer the article available on the ACCA website. Okay. Now, as per auditing standards, it is permitted for external auditors to rely on work of internal auditors if they consider it appropriate. It is a judgment of external auditor to rely on internal auditor work as final responsibility of external audit will remain on external auditor even if they are relying on work of internal auditor. See, during external audit, if you're relying on the work of internal auditor, the final responsibility still belongs to you. See, what you need to understand is that external audit is a profession which is regulated. The qualification, the independence of external auditor is regulated. But when you talk about internal auditor, the things are not regulated. So this is the reason why external audit is more reliable and more trustworthy. Now, if external auditor will start using the internal auditors, the trust of the users will get impacted. So what the auditing standard says that if external auditor is using the work of internal auditor, it is his judgment and it is his risk. Okay, because final responsibility will belong to the external auditor only. Okay. However, it need to be considered that in some local jurisdictions, use of internal auditor work in external audit is not permitted. Okay, if the legal environment in which Thornham Textile Company operates, if the legal environment in which Thornham Textile Company operates, it is not permitted to use work of internal auditor, then our firm cannot use their work during external audit. Okay, like if the legal environment don't permit, then the debate is over. If permitted by legal environment, if permitted by local laws, then our firm should consider three factors or three areas before relying on work of internal auditors. These three areas include evaluation of independence of internal auditors, that how independently they are working in Thornham Textiles Company. Okay. Further, it includes evaluation of competence of internal auditors performing work, and lastly, it includes evaluation of the actual work done by internal auditors, that whether it is done with sufficient quality and systems or not. Okay. So before relying on the work of internal auditors, we have to consider a lot of factors. Okay, like whether they are independent or not, whether they are competent enough or not, and whether the actual work they are doing, whether it is done in a disciplined and a systematic manner or not. Okay, now let's explain each of them. In order to evaluate independence of internal audit department, it needs to be considered that to whom they are reporting within organization. Okay, in Thornham Textiles Company, they are reporting to audit committee, which shows that they are operating independently. Okay. Further, it also needs to be considered that staff within internal audit department shouldn't shouldn't be the ones transferred from other departments, because if they are the ones who are transferred from other departments, then obviously they will have friendships, relationship with other departments, and then their independence will be questionable. They should be the independent staff. Okay, they shouldn't be transferred from other departments. Secondly, competence and resources of internal audit department also need to be considered before placing reliance on their work. It needs to be considered that staff within internal audit department are sufficiently qualified and have sufficient systems to perform the internal audit work with reasonable quality. Okay, see, these are the considerations. You are explaining each of the consideration. You need to think about their independence, you need to think about the competence, and then most importantly, you need to review the sample of their work, that whether the work which they are doing actually is a quality work or not. Like whether the work they are actually doing is disciplined, it's systematic, they are maintaining proper documentations or not. Okay. External auditor or our firm also need to consider the actual work done by internal auditors during the year, that whether it is done with sufficient discipline and quality or not. It needs to be considered that sufficient audit work was performed or not, and whether documentation was done properly or not. Okay, supervision levels involved in actual work done by internal auditor will also impact decision of external auditor while relying on their work. Okay, so what are the considerations which we take while deciding to rely on the work of internal auditors? Okay, see, this is a complete technical article on this topic. This topic is part of your course. If you don't remember, you can simply go and write AAA technical articles. There is a complete article on this, just showing you that article for your guidance. Okay, so that you get an idea that why is it important to use and understand these technical articles. If you just wait a minute, using the work of internal auditors. See, this is a complete technical article available on this. Okay, so it's very important that you use these technical articles while you are going for the actual examination. Okay, so this is a complete article in which all of the factors are given that we need to evaluate. First, we need to look at the laws and regulation. We need to look at their independence, objectivity. Okay, then we need to look at their level of competence. Okay, we need to look their actual work, that whether the level of work they have performed is done with proper quality or not. Then as far as direct assistance is concerned, as the audit committee said that they expect that we use them for the direct assistance. So whether we can use them for the direct assistance or not. So for the direct assistance also we consider all of these three factors, and most importantly, we shouldn't be giving them the judgmental work. Okay. After consideration of above three factors, external auditor or our firm may decide to use work of internal auditor in relation to control evaluation. However, it is to note that work of internal auditor should not be used in areas of high risk and judgment, an external auditor should prefer to perform those works, those tasks through their own team. Okay, like, because in this question it was written that they have done the control evaluation and they want us to use that report, place lines on that report. So we can use it, but not in the areas of high risk or where the judgment is involved. Okay. Lastly, request of audit committee to use internal auditors for for direct assistance in external audit work also need to be considered. Okay. External auditor or our firm need to consider independence of internal audit department and their competence before using them for direct assistance in external audit work. Direct assistance means that we will be using them for performing of procedures during the audit activity in external audit work. However, it is to note that in areas of high risk, external auditor should not use internal auditors as or for direct assistance, because again the reason is that in areas of high risk it is better that we perform the work ourselves only, because no doubt the independence of external auditor is always greater than internal auditors. So it was an 8 marks requirement. See, whenever you get these general requirements, like this requirement was to be simply developed through this technical article of using the work of internal auditor. It was a simple requirement. Okay. But when you have such general requirements, you need to follow the marking scheme of 1 mark each. Okay. You first referred that auditors can do. You refer the regulatory issue. You said that if permitted by the regulation, auditor has to consider 3 factors. You explained each of the factor: independence, competence, and quality of the work. And you said that even after consideration, it's recommended that we don't use them for high risk areas. And we made 1 comment on direct assistance as requested by the audit committee. So 1, 2, 3, 4, 5, 6, 7, and 8 points, which makes your answer for 8 marks. And with this question is done. Okay. So if you look at this question, I believe that this question is not a difficult one. Evaluation of audit risk, it was easy because it included some very much routine audit risk. Okay. Then there were 10 marks for the audit procedures and a simple requirement from a technical article on using the work of internal auditor. See, I hope that by this past paper discussion of this official mock exam of ACCA, you must have got an idea that how you have to deal with an actual exam paper. Okay, this is just question number 1. In next 2 classes, we'll be looking at question 2 and question 3. It's very important that before going for your actual examination, you watch these complete past paper discussion sessions. For my students, I have discussed around 8 to 9 complete exam papers so that they can have a firm idea that how they have to deal with the actual exam. Once you have watched my past paper revision sessions, then there are 3 mock exams available on my learning management system for my own students, which you have to attempt on your own and send me for personalized feedback, which is the best thing I offer to my students. So I hope that this discussion has added value to your preparation. And if you have any query, feel free to contact me on my WhatsApp number. Okay? Thank you, everyone.